Good morning. Welcome to Currency Change Daily Foreign Exchange Report on Friday, the 11th of October 2013. My name is Laurent Guilbaud, Managing Director at CurrencyChange.com, low-cost solution for your international payment. You can open an account for free with us and no obligation to exchange on www.currencychange.com. The price action in the equity markets yesterday tells us that investors are excited about the prospect of a temporary increase in the US borrowing limit. As the prospect of a temporary US spending agreement nears, we could see a further improvement in risk appetite. Finally, we see some progress in Washington. Republicans are negotiating with the President, Obama, and Democrats for a short-term debt limit extension through a clean bill that will push the hard deadline to the 22nd of November, giving them more time to discuss a broader deficit reduction plan, including Obamacare. Chances of an agreement are quite high. Republicans have made the first step, so Obama has to respond now, and we could see a vote as soon as today or as of Tuesday, because Monday is a bank holiday in the US. Each week the government remains shut down. US GDP growth is saved by a minimum of 0.1% yearly. Even if furloughs, government workers receive back pay, the shutdown will still have a negative impact on consumer and business sentiment in the US spending. Between the drag on the economy and the nomination of Janet Yellen as Federal Reserve Chairwoman, the chance that the central bank will taper asset purchases this year has dropped to almost zero, as we've been saying for weeks. In the US, US jobless claims surged to 374K from 308K, to its highest level since March, but according to the Bureau of Labor Statistics, the data was distorted by the recent computer upgrade and dismissal of US government employees because of the shutdown. The delay in other economic reports and the distortion in jobless claims means no action from the Fed in October, and if the government shutdown extends into December, the central bank, the US central bank, won't have enough reliable information to taper asset purchases at the end of the year. In Europe, economic data was disappointing, with industrial productions falling short of expectations in countries like France and Italy. Accordingly, the ECB President Draghi, who spoke in New York yesterday, the Eurozone recovery is expected to be subdued, uneven and fragile. He highlighted the downside risk and said any positive economic reports only shows a recovery at its infancy. This explained why the central bank is comfortable with the current level of monetary policy rates, and along these lines, Draghi reaffirmed their plans to keep rates low for an extended period of time. For the time being, it appears that the next step for the ECB could still be to ease interest rates and not to tighten them in their monetary policy. In UK, the Bank of England decision to leave monetary policy unchanged yesterday was with no surprise. With the limited British pound movements we observed against the euro and US dollar due to that. Signs of slower growth in the service, manufacturing and construction sectors validate the central bank's decision to keep asset purchases unchanged, but past trends should also keep most policymakers optimistic. In terms of live exchange rate, we're trading live on sterling dollar at 159.86, 50 pips higher than yesterday. On sterling euro, we remained unchanged at 1.18 compared to yesterday. On euro dollar, 135.40, 30 pips higher than yesterday. Sterling Australian dollar, 168.60, we are lower. On sterling New Zealand dollar, same thing, 192.10, we are lower. In terms of economic agenda, UK time, we will have at 9 o'clock the German CPI, year-on-year 1.4%. At 2:30 we won't have the US dollar advanced retail sales because of the government shutdown, so no view there. The key indicator we'll have is at 4 o'clock the US dollar Michigan consumer sentiment, expected at 76 versus 77.5. Would be interesting to see the impact of the shutdown. If you require further information, please visit now CurrencyChange.com or contact us on +44 0207 373 2686. Have a nice day, and if we don't speak to you, have a great weekend. Bye bye.